But the rally in retail was not enough to lift the broader market today, even after Secretary of State Mike Pompeo said that he thought Washington and Beijing were on the cusp of reaching a trade deal. It was a rather subdued day on Wall Street, with the Dow closing down just 13 points to 25,806. The Nasdaq fell just 1. The S&P was down 3.
And believe it or not, this week will mark 10 years since the start of the bull market. During those dark days a decade ago, no one really knew where the market would find itself in 2019. But here we are, and the past 10 years could lay the groundwork for the next 10. Mike Santoli has more.
As the 10th anniversary of the climactic March 2009 market bottom arrives this week, many observers are focusing on all the ways this period since the global financial crisis has been extraordinary. The worst economic shock in 75 years felled huge financial institutions and ushered in the most aggressive central bank stimulus efforts ever seen. Yet perhaps more striking is how very typical this decade has been for stock market investors. Since the S&P 500 sank briefly to 666 on March 6th of 2009 and reached its closing low 3 days later, the index has delivered a 10-year annualized gain of 17.8%, including dividends. That almost exactly matches the yearly total return in the 10 years following the 1987 stock market crash and the generational stock market low set in the summer of 1982. While in general markets don't follow a specific pattern, a buyer of stocks at depressed levels after a dramatic collapse tends to enjoy gains substantially better than the 10% historical average. So what does this say about the prospects for the market from here? Well, when the 10-year rate of return has reached similar levels in past cycles, the bull market was pretty far along, but still had some life left in it. Near the end of very strong bull markets, such as in the 1950s or the 1990s, the trailing annual gains have been nearer to 20%. Of course, there are no guarantees, and nasty market shakeouts are a feature even of long-term uptrends. The 20% drop late last year is still viewed by some strategists as an early tremor of a more damaging downturn, for example. And it could be. But over the past decade, the bull has weathered several such tests and hasn't yet failed one for good. For a Nightly Business Report, I'm Mike Santoli.